Let's talk about it, okay? So if you're wanting to get a shop, right? There's gonna be a couple of things that you might want to think about, right? And so when I transitioned from a technician more to like a business owner, the way I started was I started doing it at night, right? So I would work during the day. I worked at the dealership, and then at night I would go to a shop, and then I would work at the shop till like about 2 or 3 in the morning. Do it again, do it again, do it again, right? And so some of the things that I've learned during from when I started to where I'm at now. Where am I at now? Okay, we own a building that's 8,000 square feet. It's called owner occupied, right? So what that means is that we use the majority of the building and then we rent the other half out. So now my shop is an income producing asset. So not only am I using the business, my building to make money for the collision shop, we're also renting out space to generate additional income. Okay, that's one strategy that I did. But how did I get to that point, right? How did I get to the point where I was able to buy a building? Okay, building of that size. Okay, what I had to do was remember. So that's why I tell technicians, I mean, if you've been at a job for, 5 years, 10 years, that on paper you have steady income. So banks like to see steady income, okay? And so a common mistake that a lot of technicians do, that maybe they have some money in their 401k, or maybe they have whatever, right? They always go to, I'm gonna open a body shop. How do I get a loan for a body shop? Okay, a bank's not gonna lend you money for a body shop because it's too risky for them. Okay, it's too risky for them. Think about it like this, okay? Let's just say if you had $50,000, right? And your friend came to you and he says, "Hey, I'm gonna restore this car." And he says, "I'm gonna restore this car, okay? I think we can make about 70,000 once I fix it and sell it, and we'll go half." Right? You're like, "Man, I don't know, man. How long is it gonna take you?" Well, I'm thinking it might take me a year or two to finish it. Okay. What if you get sick? Oh, I didn't think about that. What if what if something happens to you? Like you can't work, you injure yourself? I didn't think about that. What if you and your wife separate? I didn't think about that. What if there's a death in the family? I didn't think about that. What if there's what guarantees do you have that I'm gonna get my money back? Well, I don't have any guarantees. What if you get halfway through the job and you just decide you don't want to do it anymore? What happens to my money? Like, think about it. Like, you can't sell that car and get your money out of it because it's not going to be worth it, right? So that's the way a bank looks at it. That's the way the bank looks at it through a business perspective, okay? So what do you have to do, okay? So I would suggest that if you still have your job, right, and you get a W-2 and you get an income tax return and you have dependents, right, you have income. I would suggest that maybe you purchase a building first as an asset, as a real estate investment asset, okay? You can actually rent the building to yourself. That's one way to do it. But and also, because you have steady income, the bank will see that your income supports the expense of the building. Okay, it gets very tricky, but it's not that difficult once you kind of get. Also, too, what you can do is you can go to a bank, okay, and you can start to get collateral loan. Okay, a collateral loan is when you go and you borrow 5,000, but they use your savings account as collateral. If you don't pay the 5,000, we'll just get it from your savings account. Okay, but what it does, it helps you build a business relationship with the bank. Okay, you want to start building a relationship and you want to let them know what your plan is in the next couple of years. So the way I did it was I went to the bank and I said, "Hey, I want to get a collateral loan." He says, "Okay, how much do you want?" I said, 2,500. And he says, "Okay, well that means that you have to have at least 2,800 in your savings account." This was about maybe 15 years ago. Okay, he says, "Okay, make sure you have about 2,800 in your savings account, and I'll lend you the 2,500 on a collateral loan." Got it. Okay. A couple weeks later, he says, "Hey, I put the money in your account." He put the 2,500 in my account. He used my savings as collateral if I don't pay the 2,500. What I did was I just used that money, the 2,500, to pay the loan back. And what I was doing is I was paying a little bit of interest, but the most important thing I was doing is I was building business credit. I was building a relationship with the bank. Okay, it doesn't matter. They don't care what you do with the money. They just want to make sure you pay them back. Okay. What I ended up doing was I ended up paying it back in 1 year. They'll give you more time, but I just kind of said, I'm just going to pay it back in 1 year, get it over with. Okay, once I got it over with, I waited a couple months. I did another one for 5,000. Okay, I did this a couple of times, and what it did was it established me to build a relationship with the banker. Okay, It's going to be the loan officer. So remember, look, this is another thing too. Whenever you're going to get a loan, you're not going to go in there and just talk to a regular loan officer. You want to deal with a commercial lender. A commercial lender is different from like one that you go to get a car, okay? Or you go to get a personal loan. A commercial lender is in the business of doing business with other businesses. So if you go in there and you says, hey, look, I've been working at the dealership for 10 years. Here's my proof of income. In the next year or two, I would like to maybe be in a position to buy a warehouse, buy a building, buy a shop, okay? So let's look at your information. What are you planning to do with the shop? Well, I want to open a business from there, okay? So tell us about your business, right? So that might be a red flag when you say, I'm going to buy the building to open up my business. But you have to make sure you say you're going to keep your job, because remember, the job is getting you secure to buy that building. One thing that the bankers look at is they say, okay, let's say you're going to buy a building and you say, hey, I want to buy this warehouse, but I'm going to rent it out. And they see that the rent is gonna support the monthly payment. So that looks really good because it doesn't affect your income. You see? So what I would suggest is saying, hey, you know what? I want to buy an investment property. I want to buy a building. Okay. I want to buy this building for $300,000. I looked at the rents in that area. I could probably rent it out for $2,500. So now the rent will support the monthly payments. Okay. Okay. That's one way to get into the building. Then you can transition and say, hey, you know what? Once I buy the building, maybe get a tenant in there, or maybe you become the tenant. So you actually rent it to yourself, okay? But you got to make sure that you're able to support those payments, okay? That's one way to get into a building. You can also look to see if someone will seller finance it to you. The thing with seller financing is a lot of people will get caught up in that, because goal with seller financing is sometimes the interest rates will be higher, but if you prepare yourself, you can refinance it out. And what I mean by that is, like, let's just say for example, the building is $300,000, right? And the owner says, you know what, I'll sell you the building, but you're gonna have to pay me in payments. The payments are gonna be a little bit higher if you go through the bank, cause I'm selling it to you myself, right? You can buy it like that. You want to try to refinance it as soon as possible. And what I mean by that is, like, let's say you're buying the building from John Adams, right? Okay, so, and let's just say your bank is American Credit Union, right? So you're gonna go to your bank and you're gonna say, hey, I bought this building from John Adams and I want to refinance it in a couple years. What do I need to do to refinance it? And they're gonna let you know what information you need to have to refinance. One of those is gonna be like a lease agreement. One of those is gonna be make sure that you have good credit. One of the things is, like, make sure that you can support the income. That was one of the biggest obstacles, is to prove that you have income to support the asset. Okay. You can also lease a building. There's nothing wrong with leasing a building. Leasing a building, what that means is that you're going to sign a 1 year contract saying that you're going to stay in that building for 1 year. Basically what that does, that guarantees that landlord that you're going to pay him that much money. So if the building is $1,000 a month, you're agreeing on paper that you're gonna pay him $12,000, right? And so one thing that you can do, if you're not sure about if you can make those payments, is you can look at the details on the lease, and you can say, hey, Mr. Landlord, I noticed on the lease you said that if I'm late after the 3rd, there's gonna be a $25 late fee every day. Can we maybe move that to the 10th? Because I'm just getting started, and it's gonna be tough for the first couple of years, but once I get going, I'm hoping to maybe make sure I'm on time. Let them know what you're doing. That way they can adjust the lease so that you understand you're not getting into a mess. The last thing you want to do is you don't want to get into a lease and they have all these restrictions on there. They have all these requirements and stuff that's going to mess you up. And one of the things that might mess you up is they might have on there that you might have to have a certain amount of coverage, insurance coverage. And if you don't read that fine print, then you're in violation of the lease, okay? They can evict you, and they can also maybe go after you with a lawsuit or something because you didn't obey the lease. So one thing about the lease is, like, you can change the lease. You can add things on there. You can remove things on there. Whatever the case may be, right? So, like, we talked about 3 different things. We talked about purchasing a building from your bank, right? How are you gonna do that? Purchasing a building from a seller finance option, and then we talked about leasing a building, right? You can also do month to month. Okay, there are some places that will do month to month renting, and the only thing you have to be careful about those is you might not have all the the protection. And what I mean by that is, like, let's say if you sign a 1-year lease, right? And that's a 1-year agreement that you're gonna be at this building. And you're late on the rent. You say you're late 10 days. And they say, hey, we're gonna evict you, you gotta be out. They still have to take you to court, they still have to go through the process. So you're gonna be able to stay there for another 30 days, maybe even more. It depends. You don't have to like move out that day. One thing about being month to month is that you're not gonna have that protection. So you gotta be careful, because if you have a lot of expensive equipment, and you have customers' cars, and you don't have like a real solid agreement on where you're staying at, they could change the locks on there, and you could be screwed. So you gotta be careful, because some landlords are dicks like that, and they'll kind of they'll structure the deal to where, like, if you don't pay, they'll go change the locks, and they'll say, hey, I want all my money. You know, if not, I'm going to keep your stuff. And it gets kind of messy. The honest thing that I would suggest is, like, man, if you're going to get a shop for the first time, is talk to the owner of the shop and says, hey, this is what's going on. I work full time. I'm going to start this business on the side. I'm hoping to get started within the year. It's going to be rough at first, but, like, if you work with me, please, I would appreciate that. Also, you can just say, hey, man, like, if it doesn't work out in the first 6 months, you know, and I have to move, I promise I'll clean up the place. I'll have it ready for you to rent. You know, the thing you don't want to do is you don't want to tie them up on that building of not being able to rent it. A couple of things that you're also going to need to think about is, like, are you going to need a compressor? Are you going to need lighting, an air filter, a security system? Some of those things you got to make sure you think about. We opened a shop a while back, and we had to buy a new compressor, right? Okay. Then we had to put in a new galvanized pipeline in the whole shop. That cost us about $1,500. Then we had to put a new breaker box. That costs us another $1,500. Okay, so think about all these things before you're going to get a building. So whenever you go look at a building, see what the power source is. It wouldn't be a bad idea to find a electrician or someone in your area and says, hey, I'm gonna go look at this building. Can you go tell me if it's wired up to run a compressor? A big compressor, right? Also, you don't want to put your compressor inside. It's going to be real loud, okay? So those are some of the things you want to think about. You also want to think about, is there going to be an issue if you're going to be washing a lot of cars? Because sometimes if you're in a spot where they don't allow you to wash cars there because the way the water runs off, the city might try to fine you because you don't have proper drainage. So those are some of the things you got to be careful about. I know a while back, it's been several years back, but there was a detail shop that opened up. And they started off as a small detail shop, but they started to grow really fast. And one thing that happened was the city went and shut them down because they were wasting a bunch. They were like, the water was just draining in the street. It was going down the rain gutters. That's not the proper way to do it. Because think about it. Whenever you're washing a car, a lot of times they're like, well, whenever you're washing the car, you're dropping oil. There's other contaminants that's going to go into the water system, and that goes into the bay. There's a bunch of different things, right? So they made them put in this. They made them hire a contractor to get a water drainage. Like if you go to a car wash, if you go wash your car, that drainage, they had to do that whole thing, and they had to pay out of pocket. And they didn't buy the building, so they had to just either go out of business or just get it done. And they just did it, and they left it there. So those are some of the things you might want to look out for. One thing I talk about a lot is location. Location is going to be very important because you don't want to get a shop in the hood, and then people are going to be breaking into your shop, or they're going to be vandalizing cars. Customers aren't going to feel safe to take their car over there. So just be very selective when you get your first shop. One thing that I also did when I was very first starting was I partnered with the guy. So there was a guy that had a pretty nice shop. And I said, hey, would you mind if I rent out an area in your shop? So he had a nice shop. He had good equipment. He had the air compressor already set up. I just went and I was renting out a one bay area that I would do side jobs on. And it worked out for me to get started and get the momentum going. But hey guys, I hope this video was helpful. If you like stuff like this, if you like stuff that's about building a shop, starting your business, tool review, watch more videos of what we got going on. Our building right here goes from right here all the way over there to the other side. So those two over there, those are the ones we rent out. So we occupy from like right here all the way over here. But some of the things, like I said, you want to consider is like your signs. You have to make sure you get good signs. Those signs are about like $1,500. I think we got that one made, and then this one on the side made. But those signs are going to be kind of expensive. Let's see that one. Those are I think that one's like 8 by 10. I think that one's an 8 by 10 too over there, and that one's like a 4 by 8. But those are made out of aluminum. Those are kind of expensive. They're vinyl. One thing too, you want to make sure that you get the good vinyl because the sun will burn those out. We had to get them redone a while back. You can see it comes out, extends all the way over there. We had to put in some camera systems there. We have camera systems. We have some lighting. So you're gonna want to think about all that stuff. It also goes. We have some parking in the back where it's fenced in, but you can see that. But we got this building a couple of years back. But this is where we're at, guys. Hey, if this video was very helpful, I got another one for you right here. It's also going to be very helpful to get yourself started and moving in the right direction.